Our next guest believes the AI spending trend, well, it's going to continue. Matt Bryson, Wedbush Securities Senior Vice President of Equity Research and Hardware, joins us now. Has a buy on Nvidia. Price target at even 1,000. 60 Minutes does a great job of informing people about things that, about Nvidia, perhaps, that so many don't know about. Not our audience. They know plenty. So let's forget about that and just talk about last week's news that was more important for our audience, which is namely Alphabet, Microsoft, Meta. Those CapEx numbers were enormous, Matt. What does it mean for Nvidia when you look through those numbers in terms of how much of that spend ends up with that company?
Look, these large data center operators have been spending more and more on AI as a percentage of their CapEx. Now they're telling you they're going to spend more in CapEx, and that a lot of that's going to be devoted to AI. NVIDIA's said multiple times that the cloud is more than 50% of their spend. I think if you add social media in there, you're probably talking more than 2/3 of their spend. And so if those large consumers are going to spend more, that's a great thing for NVIDIA.
Yeah, I mean, so how do you model it out? I mean, I can go through, I think of Tesla and what they're going to spend, not to mention even Musk's XAI startup, which is raising billions to basically spend in the data center, so to speak, and on from there. Is the market justified in sort of the current multiple on this stock, and or even should it be higher given the potential it has?
Yeah, NVIDIA from a multiple perspective isn't crazy expensive. So the last time we downgraded NVIDIA, it was because it was getting close to 50 times, which you have to go back to Cisco in 2000 at the peak of the internet bubble to have that type of valuation historically for such a large company. Now, from an earnings perspective, if I remember correctly, my multiple is based on a little over 30 times. NVIDIA's traded there lots historically. So I don't think it's expensive. I think rather the question is at some point, do we get a pause in investment because some of the promises of AI haven't shown up yet? I don't think that's happening this year. I don't think it's happening through Blackwell. So we're a year plus out from that being a risk, in my view.
Is China still a wild card in this story at all?
I think it's a wild card in the sense that NVIDIA is apparently shipping some product again. So there's some benefit there. Do they lose that benefit again because the U.S. steps in? Perhaps. At some point, China has to come up with a strategy around AI, and that potentially is a threat. But I think that's some ways out because they're handicapped by the restrictions the U.S. has put on their ability to get high-end chip equipment, and so to make advanced AI silicon.
Matt, when you talk about, a slowdown in demand at some point, is that dependent on whether or not the enterprise comes up with enough applications to make it worth companies' pursuit of these things in terms of spending the money?
That's exactly it. So you look at the applications that we see right now. I think AI has changed the coding industry. But beyond that, everything is very company or industry specific. So you see applications around visual tests for motherboards, for instance. That really doesn't benefit all of us. On 60 Minutes, they had a number of segments around how, for instance, it's benefiting robotics. But those robots aren't in production environments yet. And so I think we need another major application that's ubiquitous in our lives. So something like an Uber to show up. And I think that will be developed. It's just no one knew that ride sharing was going to be a thing before ride sharing was a thing.